a lot of information to go over today, so we're going to go ahead and get started. First of all, thank everyone for joining me today. Today's webinar is How Employment and Disability Benefits Work Together. My name is Susan Faltynski, and I am the Manager of Community Employment Services here at ADEC. I have been with ADEC for almost 9 years now, with the entirety of that time being within the Employment Services Department. I have done everything from direct client supports, program design and implementation, benefit planning and strategies, all the way up to overseeing all the program services within the employment area. ADEC's Community Employment Program is designed to assist job seekers with identifying their skills, strengths, and vocational goals, guiding them through the job application and interview process, and supporting them during their employment, regardless of whether it's short or long-term supports that are needed. One of the most vital services that we offer is that of benefit planning. During benefit planning, we assist participants with identifying their current benefits, other benefits that they may be eligible for, and we help to create a strategy for their entry into the job market so that they can maximize both their earnings from work without risking their much needed benefits. Today's presentation is the second part of our informational series regarding disability benefits and employment, and it will focus on the incentives and strategies that are commonly identified in benefit planning. Just a couple of things to note before we get started. We invite your comments and questions. Please locate the chat box on your screen. If you think of a question at any point, type it in there and it will be held for the end. We hope to have about 15 minutes for open discussion after the end of the presentation. We are recording the webinar today. We will be able to share a link with you after the event is complete, and we welcome you to revisit the content yourself and share it with anyone that you think will benefit from it. You will also be able to find it on our website, adecinc.com, and our YouTube channel. You will also find several documents available for download. This includes fact sheets about the topics that we're going to cover today, contact information for local community resources and agencies that can be of assistance, and a PDF version of today's presentation. There will be polls periodically during today's webinar. The information obtained during the polls is confidential, and we're only going to use it to guide today's presentation. We will not retain any individual poll information. So here at ADEC, we believe that all individuals deserve a chance to make their own choices, including the opportunity to find dignity and meaning in work. When determining whether to obtain employment, it's important to understand you do not need to sacrifice the benefits that you receive in order to return to work. If you understand what benefits you may be eligible for, how earned income might impact those benefits, and the work incentives that are available to you to help maintain those benefits, then you will be better informed when making the choice to obtain employment. I think all of us have probably heard someone say, or I mean, maybe you've even thought it yourself, I can't get a job, or I'm going to lose my Social Security, or, you know, my cousin lost his benefits when he started working. This is a huge misconception. A lot of times what is happening in these situations is that, you know, a person started working and they got a letter from Social Security or Medicaid. They got worried about what it might say, so they didn't open it. You know, if I ignore it, it's going to go away. Well, 99% of the time, that letter is asking for information or verification about the employment. But because they requested the information and it was ignored, you know, those have deadlines. So the deadline wasn't met, so benefits were ended. This then triggers a correlation equals causation mindset. It's then assumed that, you know, the benefits were lost because the work started, rather than what actually happened was the benefits were lost because they ignored what was in that envelope. So in our last family forum, we learned about the benefits commonly received by persons with disabilities and the impact that earned income might have on those benefits. Today, we're going to focus on the work incentives that are available to help you maintain benefits while employed. There's also various programs to assist with resource building and agencies that can assist when deciding if you want to become employed or return to the workforce. So when talking about disability benefits, the first thing many people think of is Social Security payments. There are many types of cash benefits paid through the Social Security Administration, but the two most common programs for persons with disabilities are Supplemental Security Income, or SSI, and Social Security Disability Income, also called SSDI. Before we dive into the work incentives available for Social Security benefits, let's take a quick poll to see what types of benefits you or your loved one are receiving. Victoria, can you please put up poll number 1? So if you could just answer the question, this will give us an idea of what type of cash benefits some of you might be receiving so that I know where to focus kind of the emphasis on the work incentives.
Looks like 33% said SSI, 17% said SSDI, 0% said both, 50% said neither, and then 0% said unsure.
Okay, perfect. Thank you so much. Okay, so we're going to first take a look at work incentives that are available for people that get the Supplemental Security Income, or SSI. That was the largest response that we received to that poll. So in the first forum, we talked about countable income. Not everything you receive is considered to be income for SSI purposes. And if you haven't seen the first forum, I highly encourage you to go onto our website or our YouTube channel and watch it. There was a lot of great information in there about the different benefits that are available. And it goes into more detail about what would count as income for SSI purposes. There are some exclusions that you would want to take into consideration. So this includes part of your earned income. The following items and amounts are excluded when determining the countable portion of your earned income. So the first $65 per month of any earned income, and then $20 for just an unearned income exclusion. After they subtract the $85 from your gross income, they're then going to, divide that by 2. They're only going to count half of that as actual income. There's also a student earned income exclusion, and we're going to discuss that next. So they'll subtract some from that. And then there's also impairment related or blind work expenses that can be deducted from the amount of income that you make that Social Security will count. Any income that is set aside for a PASS, which is a special savings program that we'll talk about a little bit later. And then any other infrequent or irregularly received income. They're not necessarily going to count all of that either. So for the student earned income, this exclusion is an incentive for people that are under the age of 22 and regularly attend school, college, university, or a course of vocational technical training. What it does is it reduces the amount of earned income that is considered countable by Social Security. Regularly attending school means that you take 1 or more courses of study and attend classes that are regularly scheduled between 8 and 12 hours per week, depending on the type of schooling that it is. Even people who are homebound because of their disability can be considered a student if they study a course that is given by a college, university, or government agency, and they have a home visitor or tutor from school who directs the studying or training. Now, there are limits on the total amounts that can be excluded monthly and yearly. So each month, a student would be allowed to exclude just over $1,900 of their income, with a total of just under $7,800 for the year. So if you are a student who works mostly over the summer, then that gives you an opportunity to exclude a majority of your summer income from being counted. There might be other expenses that are necessary that allow you to work. When calculating your countable income, or whether you're performing an SGA under SSDI, and we'll talk about that in a little bit, Social Security is going to deduct the cost of certain impairment-related work expenses and services that you need to work, and they're going to take that out from your gross earned income. It does not matter if you also use these items and services for non-work related activities. These expenses are often referred to as an IRWE, impairment-related work expense. An expense must meet certain requirements in order to be considered an IRWE. The item or service must enable you to work. You need the item or service due to a physical or mental impairment, and you pay for the item or service out of pocket and are not reimbursed by any agency. And the cost also must be reasonable. So on the next couple of slides, I'm going to show some examples of expenses that would be considered IRWIs and expenses that would not. One of the most common IRWIs is a transportation cost. So transportation costs that would be considered deductible would be the cost of structural or operational modifications to your vehicle. Even if you use your vehicle for other things like going to the grocery store or attending church or visiting family, if it's the vehicle that you use for work, those modifications, if related to your disability, can be considered an impairment-related work expense. The cost of driver assistance, taxis, paratransit, special buses, or other types of transportation that you need because of your disability, not lack of transportation, but because of your disability, would also be considered IRWIs. So this would include like locally our access transportation. I believe it costs $2 for each direction of trip. That would be a deductible expense for your work-related trips. Examples of transportation costs that would not be deductible would be the cost of purchasing a vehicle or the cost of doing non-disability related modifications like painting or pinstriping. Some attendant care services are deductible. So that would be any services that an attendant performs in the work setting or services that are done to help you prepare for work, the trip to and from work, after work. So for example, bathing, dressing, cooking, and eating. And even services performed by your family member could be deductible if they're charging you a cash fee because they've had to stop working or reduce their hours at work in order to help you. Any expense for a service animal would be considered an IRWI. And then medical devices, including wheelchairs, dialysis equipment, pacemakers, respirators, traction equipment, those would all be considered impairment-related work expenses because without them, you wouldn't be able to perform any work. Same with any prosthetic device that is not for cosmetic purposes. Some additional IRWIs often include residential modifications. If you need to install a ramp or a railing so that you can access your road or the transportation that's going to take you to work, the cost of that could be considered an impairment-related work expense. If you take medications, prescription medications are often considered impairment-related work expenses, even if you would take that medication without working. Because if you didn't take the medicine, would you be able to work? The only prescriptions that wouldn't count typically are those that are a violation of federal law. So medical marijuana, that one wouldn't be allowed as an IRWI. Or medications that are taken for anything not related to your disability. So like everyday allergy medications, antacids, those types of things. And then there's other eligible items and services depending on disabilities that could also potentially be considered an IRWI. So I would recommend that if you have any of these expenses that you're saving your receipts and submitting them to Social Security so that they can not count the cost of that against your income. Earned income that a blind individual uses to meet the expenses of working does not count when Social Security determines eligibility and payment amount for SSI either. The expense does not need to be related to the blindness, and expenses that can qualify would be the service animal, including any cost for upkeep of that service animal, food, vet costs, transportation to and from work, licenses, fees, or taxes, and that includes your income taxes. Those can be considered a blind work expense. Attendant care services, any meals that are eaten during work hours is a blind work expense. And then medical or non-medical equipment or supplies and other work-related equipment or services. So if you are considered statutorily blind based on the Social Security definition of blindness, and that is your disabling impairment, there pretty much everything is considered an impairment-related work expense or blind work expense. So it can be deducted from the amount of their earned income that they count. So let's say that you've returned to work and you're earning a decent amount of money and it's enough that it's reducing your Social Security benefits to $0. you're not going to be immediately terminated from Social Security. You have been eligible for SSI. If you have not been eligible, I'm sorry, for SSI for 12 months or less, you don't have to file a new application to reinstate your cash benefits or your Medicaid coverage. If you're working and there's a month that you are again eligible, so you don't earn enough to reduce your check down to zero, you're going to automatically receive your payment as long as you have been reporting your income regularly. So it's very important that if you do go back to work, make sure that you're reporting the income that you get on your paychecks so that they can give you an accurate payment amount. Otherwise, you might end up with an overpayment. So expedited reinstatement, or EXR, is a safety net for people who successfully return to work and no longer receive SSI or SSDI benefits and payments. So if your cash payments ended because of your work and earnings, not because you stopped being disabled, and you stop work within 5 years of when they ended, you might be able to have them start again right away through a request for an EXR. When you request one, you're going to receive temporary benefits for up to 6 months while Social Security conducts a review to determine if they can reinstate your benefits. In order to be eligible to request one, you must meet specific requirements. So this is a really great safety net. If you think that you are able to begin working, and let's say you work up to full time, you no longer need those cash benefits, but then something happens that causes you to not be able to work or not be able to work as much, and you need to go back onto disability, this can help you get back on disability really quickly. So now we're going to move on to work incentives that apply to Social Security disability recipients, or SSDI. Social Security encourages everyone to attempt to return to work, and they offer several different work incentives and safety nets for those receiving SSDI. The first is what's called a trial work period, and it allows you to test your ability to work for at least 9 months. During those 9 trial work period months, full benefit payments are going to be made regardless of how much money is earned. It doesn't matter how much money you make during a trial work period, you're still going to get your full benefit payment, as long as your work activity is being reported to the Social Security Administration. The trial work period will continue until 9 trial work period months have been reached, and those don't need to be consecutive. So it's 9 months within a 60-month period that's rolling, so 5 years. Social Security uses the amount earned in a month before taxes are subtracted to decide if it counts as a trial work period month. So in 2020, if the earnings are $910 or more, then it would count as a trial month. Beginning in January, that number goes up to $940. In the last webinar, we talked about substantial gainful activity, or SGA. So this is different from the trial work period amount, and SGA is used later after the trial work period months have all been used. Other work incentives cannot be used during the trial work period to reduce the amount of earnings. So after the trial work period is completed, the extended period of eligibility begins, and it's a 36-month period. During this safeguard, Social Security will evaluate your work and earnings based on substantial gainful activity, or SGA levels, to determine continuing disability for benefits. In 2021, the SGA is going to be $1,310 per month. Or if you are blind, then it is $2,190. During the extended period of eligibility, benefits will be received for all months that earnings are below that SGA level. The impairment-related work expenses that we talked about earlier with SSI, those can be utilized to reduce the counted income. During this 36-month period, the first time that you work above that SGA level, Social Security is going to decide that you no longer meet the requirements for disability due to work. So at this point, then your disability benefit will be considered ceased. You're going to continue to receive benefits for the month that your benefits are ceased and the following 2 months. This is called the grace period. So if your earnings drop below SGA anytime during the 36-month re-entitlement period, then your benefits can restart without a new application. Subsidies and special conditions are another work incentive for SSDI recipients, and it refers to supports that you receive on the job that could result in you receiving more pay than the actual value of the work that you've completed. So Social Security will deduct the value of subsidies and special conditions from your earnings when deciding whether you are working at SGA level. So it's value, it's not cost, because these aren't necessarily things that you are paying for. Examples of subsidies and special conditions: you receive more supervision than other workers doing the same or similar job for the same rate of pay. You have fewer or simpler tasks to complete than other workers who are doing the same job. Or maybe you have a job coach or a mentor who helps you perform some of your work. You are not required to have paid for the support services in order for Social Security to deduct the value from your income. So for example, if you have a job coach that visits you, let's say 10 hours per month, Social Security could say, okay, well, for those 10 hours, you weren't working at the same level as others, so we're not going to count 10 hours worth of your pay. And that would then effectively reduce how much of your income they're counting towards that substantial gainful activity. So let's kind of see how all of this is applied, an example, because I know that it's really confusing. And a chart like this can be a great tool that assists with tracking earned income and benefits for SSDI. And I've included a copy in the documents available for download. I encourage you to download all of the fact sheets and resource information that is available. So we're going to use the 2021 numbers for this example. So let's say that I'm receiving SSDI and I decide that I am going to try to go back to work. So I'm going to track my gross income each month because I want to know, when am I using a trial work month and when is my EPE going to start? I'm also going to be able to know which months I will be eligible for my benefit payments, and I'm going to highlight those in green. And the months that I'm not going to get a payment, I'm going to highlight in red. The first month that I earn above the trial work period month is, it just so happens to be January. So I'm going to mark that trial work period month. I continue to do that for every month that I earn $900 or $40 more until I have 9 of them. So as you can see, it took me 12 actual months before I used my last trial work period month. And during all 12 of those months, I received my full and entire cash benefit payment. So my extended period of eligibility is going to begin the month immediately after my 9th month. So it took me until December to use my trial work period. So January is when my EPE will start. The new amount that I'm going to be tracking is going to be that substantial gainful activity amount. And that is that $1,310. So I want to look and see, okay, what months did I earn above that? Any months that I earned above $1,310, I'm not going to get my payment. But if I earn less, and that includes with my IRWs, then I will still get my SSDI payment. Think of it as like a faucet. So for any month that I work at SGA, the faucet is turned off and I don't get my cash benefits. Any month that it is below SGA, the faucet is turned on and I will get that cash benefit payment. If I'm working at SGA on the 37th month, then my SSDI is going to end. But my benefits can start again under that expedited reinstatement of benefits if I stop working within the following 5 years. So we talked about that expedited reinstatement of benefits earlier, and that's also available for that SSDI. So let's take a look at what happens for SSDI recipients if they are approved for the EXR. So I did the work, I worked my way off of benefits, but 3 years after my benefits stop, my disability makes it so that I am unable to work again. I apply for EXR, and let's say I've been approved. So the first month that I start getting my benefits again is the beginning of the initial reinstatement period. So this is an IRP, initial reinstatement period, and it can last for 24 months, but those months don't need to be consecutive. For every month that there are no earnings or the earnings do not meet SGA levels, a benefit payment is going to be made. So for every month that I don't meet SGA, I'm going to get my check. The initial reinstatement period is going to end after I have received a total of 24 months of payable benefits. After that, the entire safety net process is going to start over again. That means I'm going to get an all new 9-month trial work period. I'm going to get a new 36-month extended period of eligibility and a new 60-month period to file an EXR request if my benefits stop again due to earnings from work. So, I mean, as you can see, the actual amount of time that it takes to lose benefits from working is years. It doesn't happen right away, and there are lots of safety nets available in case you were not successful in returning to work. Now that we have learned about the work incentives for cash benefits, let's talk about incentives that are available to protect medical and healthcare benefits. The two main healthcare programs for persons with disabilities are Medicaid and Medicare, and each have their own work incentives available. Before we look at each program in a little more detail, let's do another poll so that we can see what kind of medical coverage you or your loved ones have. Victoria, go ahead and put up the next poll, please. So here, we're asking, do you have Medicaid, Medicare, both, neither, or you're not sure what kind of medical coverage you have?
Okay, I went ahead and shared the poll. So the results are 60% for Medicaid, 0% for Medicare, 0% for both, 40% for neither, and 0% are unsure.
Okay, great. Thank you. So we're going to start with Medicaid, since that is the one that is most received for those viewing today. And one of the biggest concerns that SSI beneficiaries have about going to work is the possibility of losing their Medicaid coverage. Indiana is what is considered a Section 1619B state. So that refers to the Social Security Act of the same name. And it provides some protection for SSI beneficiaries. To qualify for continuing Medicaid coverage, you just need to have been eligible for one SSI cash payment for, let's see, you must still meet the disability requirements as far as the definition of disability, and still meet all other non-disability SSI requirements, such as resource limits. Let's say you still need those Medicaid benefits to continue to work. As long as you don't have gross earnings that are sufficient to replace SSI, Medicaid, and publicly funded attendant care, then you remain eligible for Medicaid. The threshold that Social Security uses to measure whether your earnings are high enough to replace that is based on the amount of earnings which would cause SSI cash payments to stop and the average Medicaid expense in that state. So if you have gross earnings above that amount, which is about $38,500 in Indiana, then they can take into consideration any medical expenses that are above the average state amount if you have one of those special circumstances. So basically, as long as you are making less than $38,500, you were eligible for SSI previously, and you're still technically considered disabled based on their definition, you remain eligible for Medicaid. MedWorks is a Medicaid program for employees with disabilities that is designed to allow disabled employees to work without fear of losing their Medicaid. And it offers the same coverage levels as regular Medicaid. If you're receiving SSDI and with no cash benefits and you feel like you might be able to return to work, MedWorks could be a program that would be best for you too, not just for SSI recipients. If you qualify for MedWorks, you will be required to pay a monthly premium for services. This table summarizes the monthly premiums based on your monthly income and whether you would qualify as an individual, either married or single, or qualify as a married couple where both spouses are eligible. The premium can be as low as $48 per month. And as you can see, based on the income levels, there's no income cap. Your premium will just go up depending upon how much you're making, as long as you meet those other disability definitions. With Medicaid, a lot of us are familiar with the Medicaid waivers, so we need some protection for those too. A Miller Trust, sometimes also known as a qualifying income trust, is a special legal arrangement that is used to reduce a person's income. So this is typically done so that they can remain eligible for government benefit programs, specifically the Medicaid programs such as waiver. Currently in Indiana, the applicable income standard for persons receiving Medicaid waiver is $2,349 per month. So if a person is earning more than that amount, they will no longer be eligible for Medicaid unless they have a Miller Trust. If they lose their Medicaid eligibility, then they lose their waiver. So we want to protect that waiver. Most of the funds that are deposited into a Miller Trust are used to pay for the cost of a person's care. If you think that you're going to need one of these trusts in order to remain eligible for Medicaid after you start working, you would probably want to contact an attorney for assistance with the process. In the provided resources with this webinar, there is a additional information fact sheet from the Family and Social Services Administration in regard to establishing one of these trusts. So I encourage you to check that out too. So now we're going to talk about the incentive that is available for Medicare. A lot of people believe that Medicare benefits will end when their cash payments stop, but that's not the case for most beneficiaries. The extended period of Medicare coverage provision allows most people who continue to meet the Social Security disability standard, meaning that they still meet the medical requirements. They continue their Medicare coverage for at least 93 months after the end of the trial work period. So this isn't even from when you start working. It's after that first SSDI safety net. Even if cash benefits stop due to SGA, the Medicare coverage is going to continue. And as with all of these benefits, there are some intricacies. So only Social Security is the one that can tell you how long that coverage is going to last specifically for you. And then at the end of this period, you will also have the ability to purchase Medicare coverage if you remain medically eligible. So, I mean, 93 months, that's more than 7 years that you can continue to receive your health coverage after you stop getting cash benefits. Some of you might also be getting housing benefits, such as Section 8 or public housing, and you worry about returning to work because of that. There is a program that is available to help you further improve your independence without risking your housing. The Family Self-Sufficiency Program is designed to help individuals and families that receive government assistance to improve their economic situation. This helps them reduce their dependence on reduce their dependence on assistance programs, and it's open to all persons receiving public housing and Section 8 assistance through the Indiana Housing Authority. This program helps people in finding and receiving services and resources such as childcare assistance, transportation, education, job training, employment counseling, substance and alcohol abuse treatment, household skill training, home ownership counseling, and more. So how does it work? Well, you can begin a contracted service plan with your local housing authority, and that's going to measure your progress in reaching your individual self-sufficiency goals. The head of the family is required to agree to seek and maintain employment. The program has two main components, case management and an escrow account. So the case manager is going to assist in identifying and obtaining the training resources and services. And the housing authority will deposit funds into a special escrow account as you participate in the program. This will provide you with reimbursement for some, or in some cases, even all of the rental increases that have occurred as your income increases, as long as you comply with the program rules. So then when you successfully complete this program, you will receive all of that money that has been deposited in the escrow account. So yes, your rent is going up while you're working, but they're taking sometimes all of that amount of increase and putting it into a special account that you get that refunded to you when you complete the program. So that's really cool. Most of us know that if you work, you have to pay taxes on the money that you have earned. But did you know that some people are practically paid by the IRS to work? The Earned Income Tax Credit is a federal benefit for people who work and have low wages. It can reduce the amount a person owes on their taxes, even making that amount zero. Some people even qualify to get more money back than what was withheld. In order to qualify for the earned income tax credit, a person must have earned income, be at least 25 years old, but less than 65, unless they have qualifying children. They must be a US citizen and have a valid social security number. They cannot be a dependent of another person, and their filing status cannot be married filing separately. Earned and adjusted gross income must be below certain thresholds. So in 2020, those numbers are on this chart. The maximum amount of the tax credit for tax year 2020 was $538 if you didn't have any qualifying children, all the way up to $6,660 with 3 or more qualifying children. Another thing that people are concerned about when they're working is having too much money on hand. And having the ability to save money is often the biggest indicator on whether a person can achieve financial independence. Typically, though, a lot of the benefit programs have limits on the resources and assets that you can have. And that makes it extremely difficult to save money. So you kind of get stuck in that cycle. There are a variety of programs that are available to help you save your earned income without risking the loss of your disability benefits, though. The Social Security Administration often will count property as resources or income when they determine your initial eligibility or continuing eligibility for supplemental security income. Property that is essential to self-support, or PES, is a provision that will allow you to exclude certain properties and belongings when they calculate your benefits or determine your eligibility. Social Security will not count the value of property, tools, or equipment used for trade or business as an employee for work, or that which is required by an employer to work. So this can include mechanic or carpentry tools or tech products like tablets and computers. As long as you need them to be employed, then they're not going to count as a resource. So basically, they're not going to say, well, that's something that you can sell so that you have more money because you need it for work. Part of the value of non-business properties that are used to produce goods can also be disregarded. Let's say that you have land that you use to grow vegetables or raise livestock. As long as you use the items produced from that farm for your own household, then it will not count as a resource or income. A PASS is another savings plan. It is for your plan for your future that allows you to use your income to help you reach your work goals. For example, you could set aside money to go to school, to get specialized training for a job, or to start a business. The job that you want should allow you to earn enough to reduce or eliminate your need for benefits provided under both SSDI and SSI programming. But the plan helps you get the items, services, or skills that you need to reach your goals. Also, Social Security is not going to count money set aside under the PASS when they determine your SSI payment amount. So when they're looking at how much of the paycheck they're going to count against you, if you've deposited money into a PASS, they're not going to count any of that. With an approved plan, you can set aside money to pay expenses to reach your work goal. So examples of things that you can use the savings for include transportation to and from work, tuition, books, fees, and supplies needed for school or training, child or attendant care, employment services such as job coaching, assistive technology used for employment purposes, supplies to start a business, equipment and tools that you need to do a job, or uniforms and safety equipment. Basically anything that is work related. This one is one of my more favorite savings programs. An individual development account, or IDA, is a structured, trust-like matched savings opportunity that helps low to moderate income individuals and families save their earnings to better themselves. A side note, you are not required to have a disability to qualify for this, but most of the people who have disabilities and are receiving benefits meet the income limits to participate. So Indiana has participated in this program since 1997. And it's operating on the rationale that income alone is not enough for individuals to break trends of generational poverty. The IDA program focuses on asset building as a key component toward family and self-sufficiency. Those who participate are eligible to receive up to $4,500 in state matched funds toward an eligible asset goal. Participants also receive one-on-one counseling and 6 or more hours of financial education that covers topics such as budgeting, savings, credit, baking, taxes, and other money management strategies. So qualified participants are going to set savings goals and they're going to make regular deposits. Every dollar that is saved is matched at $3. Eligible asset goals would include the purchase of a primary residence, starting or expanding a small business, obtaining education and job training for you or for a dependent, making essential repairs to your house, or even purchasing a vehicle so that you can get to and from work. Money that is saved into this account does not count against resources for SSI. So it doesn't reduce the earned income that they count, but it's not a savings account that they will say, hey, you have too much money, you can't get Social Security anymore. To be eligible, your household must be at or below 200% of the federal poverty level. You must have earned income and demonstrate the ability to save at least your savings goal each month or quarter. So let's say you save about $500 per year, which is just a little over $40 per month, and it is matched at a 3-to-1 ratio with $1,500 in state resources. That means by the end of the program, you will have saved $1,500, but will be matched with that $4,500. So you've turned your $1,500 into $6,000. So that's a pretty awesome program to get a good start in self-sufficiency. ABLE accounts are another amazing program. On December 19th, 2014, the Stephen Beck Jr. Achieving a Better Life Experience Act, or ABLE, became a law. And the purpose of this was to ease financial strains faced by individuals with disabilities by making tax-free savings accounts available to cover qualified expenses. The designated beneficiary of an ABLE account is the eligible person who owns the account. They must have a certified disability that began prior to the age of 26. Certification can be that they were eligible for SSI, any disability insurance benefits, childhood disability benefits, or their parent or guardian can certify, yes, they had a disability, it began before the age of 26. A person can only have one ABLE account, but it doesn't need to be from the state that they reside in. So you can shop around and look at maybe some of the different benefits throughout the states. And any person may contribute to an ABLE account for a person, but the contributions cannot exceed the annual gift tax exemption, which this year I believe was $15,000. Withdrawals can be made tax-free if they are made for a qualified disability expense. This can include education, housing, transportation, employment training and support, assistive technology, legal fees, expenses for account oversight and monitoring, funeral and burial, and even basic living expenses. So as long as it's a qualified expense, you can make that purchase and without a tax penalty from making the withdrawal from the account. So how does Social Security and Medicaid treat the money that is saved in an ABLE account? Social Security is going to disregard the first $100,000 of your ABLE account balance. If it increases so much beyond that it is above the SSI resource limit, then your SSI payments will be suspended without a time limit until it's below that allowable limit. But your Medicaid eligibility will continue regardless of if you are not getting your SSI payment due to your ABLE account resources. Any assets that are remaining in an ABLE account upon the death of a beneficiary must be used to reimburse the state for Medicaid payments that have been made on their behalf, though. There are many government and nonprofit agencies and programs that are available to help you along your individual employment journey. There's obviously a lot of moving parts and things to consider when determining if you would like to explore working. So it is important to know who can help. We're going to take a look at just a few of the local agencies available, and you can find more information about these agencies and how to contact them on the resource sheet that is in the handouts. The Volunteer Income Tax Assistance, or VITA program, has operated for over 50 years. The IRS manages VITA, but sites are managed by IRS partners and staffed by volunteers who want to make a difference in their communities. The volunteers provide tax counseling and are IRS certified. Most often, they are retired individuals associated with nonprofit organizations. So the volunteers, they all have to take and pass law training or tax law training classes that meet or exceed IRS standards. And that includes maintaining the privacy and confidentiality of all taxpayer information. The IRS also requires a quality review check for every return that is prepared at a VITA site prior to filing, but VITA will assist people who are low income, with disabilities, or elderly with completing their annual tax returns. Bureau of Developmental Disability Services, often referred to as BEADS or BDDS, is part of Indiana's Division of Disability and Rehabilitative Services. BEADS provides services for children and adults with intellectual and developmental disabilities. And the purpose of these services is to enable them to live as independently as possible within their communities. We talked a little bit more in depth about the eligibility requirements for these services in the first presentation. A person-centered approach is used to help determine which services a person needs and who can best provide them. There are 2 home and community-based Medicaid waivers that provide services to children and adults in a variety of community settings as an alternative to an institutional setting care. And individuals may choose to live in their home, their family home, community setting that's appropriate to their needs. There is often a wait list for these services, so it's recommended to begin the application process as early as possible. And you can find the BEADS contact information on that handout. Ticket to Work is a program through the Social Security Administration. It supports career development for people who receive Social Security disability benefits that are between the ages of 18 and 64. It's free and voluntary, and it helps people with disabilities progress toward financial independence. It is designed for people who want to improve their earning potential or work their way off of benefits. It offers beneficiaries access to employment with the assistance of employment service providers called employment networks. You will work with your employment network to reduce or eliminate your dependence on your cash benefits. The big benefit to using the Ticket to Work program is that if your ticket is considered in use, Social Security will not conduct continuing disability reviews as long as you were making timely progress following your employment plan. Now, vocational rehabilitation is an employment network for the Ticket to Work program. So if you are working with Voc Rehab, then you can delay that continuing medical review. So Voc Rehab, vocational rehabilitation, we call it VR around here. It assists people with disabilities to overcome barriers to employment. Eligible individuals may have functional, psychological, developmental, cognitive, emotional, medical, any type of health impairment or disability can help you qualify for VR services. VR services will begin with a referral, and individuals can be self-referred, or a family, friend, doctor, teacher, anyone really can refer someone by calling or visiting their local VR office. Services that a person receives as part of VR is going to depend on their individual plan, and they're going to develop that plan with their VR counselor. It can include education in addition to employment services. So depending on your specific plan, you might work with a community provider such as ADEC. And as part of services, you may participate in activities to explore employment interests and skills, create a resume, practice interviewing skills, and more. Voc Rehab is an amazing resource. And if you are interested in exploring your employment opportunities, I highly encourage you to contact them and ask about services, refer yourself, or refer someone that you know if you think that they would be interested in benefit from these services. And again, you can find the contact information for our local offices on that resource handout. So now that you know that you can explore employment without risking your benefits, I encourage you to reach out to your local VR office to get started. You can find the contact information for all local offices in the resource sheet that is available for download. That's the end of our content, but before we go into questions, let's do one final poll. Victoria, can you go ahead and put up that final poll, please? So this poll is asking, are you currently employed? You're not working, but now you are interested that since you know more. You want to work, but you're still worried about losing your benefits. You are not interested in working because you receive benefits, or you're not interested in working for other reasons. And once that has been answered, if you could go ahead and put the results up, that would be great.
All right, so 80% said that they were currently employed, 20%
Awesome.
said that they are not working, but they're interested now that they know more, and the rest were
Great.
all 0%.
Fantastic. Thank you so much. Were there any questions that were submitted during the presentation?
Not that I've seen, but if you have any questions, then feel free to ask them now. You can just go over to the chat box.
If you think of any questions after the end of this presentation, my contact information is on this slide. Do not hesitate to reach out to me. I am more than happy to assist in any way that I can. You can call me, that is my office number, or you can send an email. If you don't have any questions, thank you for joining us. The last slide does have the websites that were used that when I was putting together this webinar, and they might be helpful for you. So if you have saved the resource sheet, you can get these websites and explore them to see if there's any information that applies to you.
All right, well, nobody seems to be asking any questions, so.
Okay, great. Well, thanks guys for tuning in today. Again, I know it was a lot of information. You will be able to revisit it on the website and get additional information. And I think that we are potentially having another family forum about our program, the Skills and Training Center, sometime next month. So keep an eye out for information about that. So thanks everyone and have a great day.